in the current market, NOIs are strong. What we've had over the past 2 years is rapid NOI growth, which was the result of rapid rent growth. We've seen rent growth over the past 2 years, and this has been indiscriminate across markets. We've seen unprecedented levels of rent growth across any market and any asset class, being A, B, C, luxury to workforce housing. Rents have grown faster than they ever have almost everywhere. Of course, Florida, Charlotte, Nashville, Austin, Phoenix, your sexy, really growing type markets, they've seen 20, 30% annual rent growth. Connecticut, which is very stable and always, kind of on the uptrend and has beautiful demographics, but Connecticut doesn't have population growth like Phoenix does, right? But Connecticut saw double-digit year-over-year rent growth. That's unprecedented. Rent's growing faster than expenses, so NOIs are growing. Now, talking about what might happen in the future, on that side of the house, and when I talk about that side of the house, I mean the NOI side of the house, the cash flow side of the house, it's already happening. Rents are growing slower. They continue to grow, but they're not growing 10 to 15% a year. Now they're at 5 to 10%, and I think that that trend is continuing to go down to where we might level off at what historically has been 2 to 3% rent growth, and that's what it always was, which is around the rate of inflation, right? And we've got crazy inflation, but and it may even go to flat or maybe a little negative. Rents rarely decrease, even in the worst environments, but they may go flat to negative. At the same time, you have expenses whose growth has, particularly over the past few years, been dramatically outpaced by rent growth. You have the opposite thing happening. So you have rent growth slowing with expense growth accelerating. I think that there's a certain portion of the rent growth that we've seen particularly over the past 2 years, sort of the COVID accelerated rent growth, that is, I'll use the term overheated, I think the renter is overstretched. So I think what you had over the past 2 years was a situation where landlords could not evict tenants. There was an eviction moratorium. So tenants who weren't paying their rent were still able to occupy units. In a natural market, if you couldn't pay your rent, you get evicted. That would be a vacant unit that a new person could come and rent. That didn't happen. And that was, supplemented by programs like Unite CT in Connecticut, ERAP in New York, et cetera, which were COVID relief for renters who could not afford rent or were affected by COVID. I couldn't work, so I can't pay my rent, and I think I don't think that there's anything wrong with supporting people who are affected, and I'm not going to take a position on that. But this created an environment of, in my opinion, artificially high occupancy. You had an extremely tight market where you couldn't find an apartment. If you were a renter looking for a place to live, you couldn't find an apartment. Now apartment becomes available. And that apartment last year was renting for $1,000, and this year they're asking $1,300. Well, guess what? You're paying $1,300 because I don't know when I'm going to find another place to live, because again, people aren't moving out. There's this artificially tight market for occupancy. So whatever, I'll pay it, right? So you've got these tenants that I think in many cases may have agreed to pay a rent that was maybe beyond their means. So where I'm going with all of this is my big concern, and I'm anecdotally starting to hear a little bit of this, is not that rents are going to go down, but that collections are going to go down, because I think that the renter has been overstretched on what they can afford to pay. And let's talk about the renter for a second. The same things that are affecting buildings are affecting renters. Not only are rents up, but so are their personal expenses, their personal energy expenses, their personal food and consumer costs are up. And by the way, all of that COVID support that they received is gone now. So everything costs more, including their rent. So they've got their rent's more, plus their their just lifestyle expenses are more, and they're getting less support, particularly on the on the working level.